Hey everybody, Chuck Barone here. Wednesday, March the 22nd, 2023. It's Fed Day, and oh man, was Chairman Powell out and talking today. Very, very interesting day. A lot of stuff to talk about. Oh my God, I hope this video doesn't take forever. But before we get it started, as always, we want to thank you guys and welcome you to the show. We appreciate your support. Markets today. Wow, crazy day, right? So the market's kind of like starting out, waiting for the Fed. We're going to hear what Powell's got to say. Market anticipating, okay, we're probably going to get a quarter-point increase. That's what I've been telling you guys to expect. Sure enough, here comes the quarter-point increase. Okay, the market takes that in stride. Here comes Yellen. Uh-oh, she's not saying good things. Here comes Powell. Did you see him today? Oh my God, he looked like he looked spooked, man. He looked like he had seen a ghost, and just that was the end of it, man. Boom, markets just kablooey. Stocks down, Dow down 530 points today, S&P down 65, Nasdaq down 190. All these indexes down more than 1.5% today. Just a total wipeout. Not surprising with what these guys are saying and what we're seeing with our eyes, right? When the government wants there to be, well, I shouldn't say the government, when the Federal Reserve wants there to be a recession and are turning the knobs to make that happen, well, they're going to get their recession sooner or later. Just how is it going to happen? Well, remember last time around in 2008, the big banking crisis? The cracks are starting to appear in this deal. Freaky, crazy stuff, man. Anyway, but we'll get to that in the comments. So stocks, horrible day. Bonds today, what a weird day for bonds, right? So the 10-year actually going down in value, rising 10 basis points, right? So the 10-year's up to 3.5%. At the same time, the 2-year is down 22 basis points to 3.96%. So now we're squeezing the inversion again a little bit closer together. No rhyme or reason to this stuff, guys. It's just, there's so much uncertainty right now. When if you guys had a chance to see Powell or, have a look at just a few words of him talking today, you can see he's got a lot on his plate, man, and this is not going to be easy stuff, right? So anyway, the bond market having a wild day. The dollar, not good day for the dollar, down almost 3/4 of a point on the index to 102.48. So the dollar losing value now. Metal at the same time, that's always good for gold and silver, precious metals. So gold rallies $29.20, $1,969.20. Silver rallies 52 cents to $22.89. So now you can see this 2,000 gold, $25 silver rounding into shape, right? Oil also up today, not much, very small, up 32 cents. Right now, banging $69.99, right at the very top of the new trough we've been talking about between 65 and 70. Let's see if oil can break out above 70 bucks throughout the end of this week. Will it come back down a little bit and stay in that trough? It's going to be interesting. Bitcoin today down, giving back some gains, $1,133, settling, trading right now. I don't think that market's closed right now, 26,978. So just a wild day of gyrations in the market. As we know, today was Fed Day. Chairman Powell, coming out talking. We all knew the quarter was coming. They've been telegraphing that, and there was a little bit of uncertainty. There was some opinion that the Fed might not raise rates at all today, a little more dovish view of things. Goldman Sachs and other analysts talking about things that way. There was even some more hawkish views, people thinking maybe they were going to go to 0.5 point today. I kind of figured they were going to settle on the middle there, raise rates to show they're serious about, fighting this inflation thing, but not at the same time, not railing markets so bad that they have a big crash, like lose 500 points on the Dow, right? But it didn't work out. It didn't work out because Powell comes out, starts talking. basically, he did not look good. He didn't look smooth today. He didn't look comfortable. He said that it was interesting the language he used today, right? So up in the past half a dozen or more meetings, the language has been ongoing increases. Basically, the Fed will be continuing to raise rates. Well, today they came out, and the interesting turn of phrase today it was additional firming as may be appropriate. So what they're saying now is the debt is, they're pretty much, that sounds to me, Fed speak wise, like they're done with these, going to continue to raise rates every month unless the data convinces them otherwise, right? Like a really rough inflation number, which we're probably going to get, or some other thing. But with the split focus now on this banking crisis, well, so they're softening their language there. Maybe the end of the cycle. We kind of figured they were going to go above 5%. With today's increase, they're sitting at 4.85% in the Fed funds rate. We'll see. I think that we've been talking about this inflation thing and rates, and how the inflation rate was way up here and the interest rates were way down here. We know that to get inflation down, the interest rate has to ultimately be higher than the rate of inflation, right? So we're not there yet, right? Even today we're at 4.85. We know, depending on what you're using, right? Are you using their Fed's gauge? Are you using the CPI? But anyway, we still have a ways to go to get rate increases. I will not be surprised in any way, shape, or form to see another quarter point increase coming. Rates are going to have to get higher. We'll see where the numbers come in next on CPI. But interesting stuff going on. So this bank panic, right? Yellen out today saying that the Fed and the FDIC are not changing their insurance policy, right? So as soon as the poop hit the fan at Signature and Silicon Valley Bank, the Fed and the government stepped right up real quick. We're going to make everybody whole. Well, now Yellen kind of telegraphing that may not happen in every case, right? Which that then tanked. That was a big part of the bad stuff today. I don't know why they have her out there talking, man. She just, even when she's on her best day, does not inspire confidence. But anyway, so she spooks them. Hopefully not going to start a run on things and banks. She might have to come walk that one back a little bit, right? At the same time, I was reading an interesting story today. Was this Michael Burry guy, who was the big short guru, the guy who predicted the big market crash in 2008. He was pointing out in this article that two pretty big regional banks, Comerica and US Bank, both have more than 60% of their assets uninsured, right? So this means that a lot of their depositors, must have a ton of big depositors, and those depositors have way, way, way more money in their bank than the $250,000 FDIC limit. That was the same kind of scared money that created the big run at Silicon Valley Bank, right? We knew they had this big $58 billion liability. I don't know what the specific numbers are at those two banks. But they had their FDI insurance was here, and the actual assets were here, and they got hit with $42 billion of withdrawal requests in one day. They got taken over by the FDIC the next day, right? So this banking thing, as I was joking around yesterday, I was saying, let's call this banking crisis transitory, because Powell was out there today saying how the system is sound and in good shape and bobbity-beep-beep bullshit, right? These banks now they're going to have to consider putting these regionals and every bank back under the Dodd-Frank guidelines, the same ones that JP Morgan and the bigs are following, right? These scared money is going to be a little bit That's going to be the worry now. Powell today spoke pretty cautiously, but you could see the market moving as he was talking, because basically he was saying, they're going to be sensitive to the data, but rates will obviously probably continue to rise. That he kind of was trying to get a little more Fed speakish and have it both ways, but not a great deal of confidence-inspiring stuff today. Now and tomorrow and the next day, we're going to be looking at employment numbers. Now, these numbers are going to put more pressure on Powell. He's going to want to stay on this inflation fight. The bankers, the government, big lobbies against him. There's going to be people that feel he's too tight. There's going to be people that feel he's too loose. The guy is not going to be able to win. He was talking about today the balance sheet increase, which we all saw. We've been following that stuff. He was talking temporary lending to banks in the wake of this. Basically, what they're doing is they're lending at face value assets that are not right now selling at face value, but will mature at face value, like treasury bonds, right? So these banks are all holding treasuries with real low interest rates. The value of those bonds from their face value is down if you were to sell those bonds today. The Fed is allowing them to borrow on those bonds, okay, at the face value. Because they hold them to maturity, they're going to get that face value. You can't lose money on those bonds if you hold them to maturity. So that was for the reason for the big bump. The language he used, let me see if I can find this on here. He said that, this is the quote, "The temporary lending to banks was not intended to directly alter the stance of monetary policy." Meaning, this is not QE, this is not the start of a new QE, although it is, okay? But it's not going to be their policy to do this, apparently, unless they have to. It's almost like a finance comedy. It's just really sad because, nothing is going real well for us right now. You're going to add on the moral hazard now of the Treasury making everybody whole. They can't make every bank account. If every bank went under, the Treasury can't make everybody whole, okay? You have now, no one's talking about the commercial property issues. Everybody trying to work from home. Commercial properties not having a lot of difficulty renting, getting rent increases, keeping up, making payments, big issues. Banks have a lot of exposure to commercial property, including their own holdings, right? I was reading today, one of the big subprime auto lenders, American Car Center, closed all 40 locations. They were in 10 states. More than 7% of subprime auto loans are more than 60 days late, meaning they're never going to get caught up. It's the highest level since 2006. Okay, so this isn't bad. Car payments, people think that, these people who sell cars and sell stuff think that people can make $1,000 car payments, $800 car payments. They can't. Here's your proof. Guys, this is a time to start hunkering down, guys. Does not look good here for the U.S., man. Things are not good. Our politics are horrible. Our people are horrible. The American public now doesn't have the tolerance for even the smallest, tiniest 10-second inconvenience. Somebody steps in front of them. Somebody needs to get on the freeway and merge into traffic. No tolerance for any kind of inconveniences. That doesn't make for a civil society. You look at our enemies, you got Russia and China over there, kissy face, right? Guys, we need to get our collective heads out of our asses here, man. We need to come together and start getting some stuff done for this country, fighting with each other, making fun of each other, pointing fingers, doing all the crazy stuff we're doing, but not taking care of any of our own business, leads to this condition we're in here. Nobody's paying attention, man. And supposedly the adults who are supposed to be in charge making a big mess of things, guys. So this is the day that is today. Tomorrow, I'll go through all of the Powell's comments and, get a little more specific data. This is just off the hip of what I watched today, craziness. But we'll be back tomorrow. Employment information, that's going to be fascinating. I can't wait to see those numbers. If it actually leads to, the numbers come in super hot, man. Wow. Bad news for Powell. Anyway, guys, I've been rambling on forever and ever. I appreciate your patience and I appreciate your support. We'll be back again tomorrow to bring you guys the important stuff you need to know. Until then, take care. Thanks.